Thank you so much, and good morning to all of you. I would like to first of all make a small observations. The situation around the world must be improving a little bit if you hear so many competent, talented economists say, not as bad as feared, or not so bad, maybe not yet good, but improvement. Added to which, our economies and key players are moving from defense mode, which they had been collectively sometimes in 21 and certainly in 22, to competition mode, as Larry indicated. So something must be getting better, and certainly better than what we feared initially. 22 was just a weird year when you look at it. Inelasticity of supply, no real big engine for growth. If you look at the GDP numbers, it's totally, counterintuitive. Growth in the United States, 1.9%. Growth in China, 3.3%. Growth in Europe, 3.4%. Those are not usual numbers. This is not the normal ranking that you have. So we are now heading to a year where hopefully the corporates, the consumers, the state, policymakers will continue to have that resilient, determined approach in order to engineer the transitions that must take place, whether it's digital, whether it is green, whether it is inclusive, in order to make sure that the most fragile countries in the world benefit from those innovations, as Larry referred to. But we have to also stay that course of resilience that we observed in 22. So stay the course is my mantra for monetary policy purposes, no question about that. But I think other players must also do the same thing. And they must do it in probably a more subtle way than they had in 22. The fiscal support that was expanded in 22, for instance, must be better directed, better targeted, must be made such that it is not going to push the monetary policy actors to having to do a bit more, as Kristalina earlier on alluded to. So, in all that, China is waking up again. After, assessed to be 3.3% growth, it is now forecasting 5.5% growth, and we should welcome the auspices of those commitments. And it is a case that the COVID policy or the change of this COVID policy will kill a lot of people, but will also revive the economy, and that's clearly a determined choice that was made by the Chinese authorities. What impact it will have on all of us in terms of added demand addressed to the global economy is something that will be a positive for China, most likely, will be a positive for the rest of the world, but will have inflationary pressure on many of us, simply because the level of energy that was consumed by China last year was certainly less than what they will consume this year. The amount of LNG that they will be buying from the rest of the world will be higher than what we have seen. And there is not so much spare capacity in terms of both oil and gas, so that we will have complete elasticity in there. So there will be constraints, there will be more inflationary pressure coming out of that added demand in commodities and energy in particular. And yes, we do try to model all that. I think that the economist profession has been put under huge pressure, whichever team they belong to. Because there are lots of things that models try to do, but modeling uncertainty and taking into account certain factors that have simply never happened in the poly-crisis environment that we faced was tough. I think our honor is to acknowledge that and to try to do a better job in the future.